So you want to get funded in 2025? Apex Trader Funding might be the move for you, but most traders blow their accounts before they even get close to a payout. The rules not as simple as pass and get paid. One wrong trade and your account is gone. Between the trailing drawdown, scaling limits, consistency rule, and strict payout conditions, this is where most traders fail. In this video, I'm breaking it all down step by step. How to pass the eval, how payouts actually work, what gets you disqualified, and how to keep your PA alive long term. Whether it's your first try or your 15th, you need to watch this video before you buy your next eval account.
Really quick, before we continue, smash that like button, hit subscribe, and ring the notification bell so you never miss a future video. It really helps the channel. And don't forget to drop a comment with your thoughts on today's topic. We look forward to hearing what you think. Now let's get back to it.
It's no secret, Apex gives traders access to massive leverage with the ability to have up to 20 SIM-funded accounts at once. These accounts are called performance accounts or PAs, and this is where your payouts come from. Like most futures prop firms, Apex uses a two-stage model. First, you gotta pass an evaluation account. That's the test. Once you pass, you're given a SIM-funded account or a PA, and that's where the real game begins. But to actually get paid, you have to follow Apex's rules to the T. So let's break this down step by step, starting with stage 1. How to pass your evaluation account. Apex offers a range of intraday trailing drawdown evaluation accounts starting at 25K and going all the way up to 300,000. You've got 3 platform options depending on what you prefer: Rhythmic, Tradeify, and Wealth Charts. Each account size comes with a specific profit target you need to hit to pass, a max contract limit you can trade, and a trailing threshold, which is your max allowable loss. That trailing threshold is critical. It's the number that, if you hit it, your account is blown. At that point, you would have to start all over and buy a new evaluation account. Now, if you choose one of the full accounts, you'll be happy to know no daily loss limit and no scaling rules. And if you go with the Tradeify option, you'll also get TradingView compatibility, a built-in Tradeify license, plus Ninja Trader access included. Once you know what platform you want to trade on, pick your account size and understand the limits. The first rule you got to worry about with Apex Trader Funding is intraday trailing drawdown. What is that? Every account size has a max loss limit, whether it's a $25,000 account, $50,000, $150,000, or even the $300,000. Each account has a max loss limit. With intraday trailing drawdown, that max loss limit trails you as your profits increase, whether you close a trade or not, which means it includes unrealized gains. Intraday trailing drawdown means your maximum allowable loss trails your highest intraday equity or profit, including open, unrealized trades. It's tracked live, tick by tick, in real time. It is not fixed at the starting balance. It moves upward only as your account hits new highs. It's important to clarify, trailing drawdown only moves upward. It's not going to move downwards as you take losses. It is based on the highest equity or profit value during the day, not just closed trades though. Intraday trailing drawdown does not reset at the end of the day. It is always calculated based on the highest realized or unrealized P&L. Let's look at 3 scenarios to help clarify it. If we take a 100,000 account, that comes with a trailing threshold, an intraday trailing threshold of $3,000, meaning if you lose $3,000 on a 100K account, your account is blown, you have to start all over and buy a new evaluation account. It's important to clarify that with Apex Trader Funding, intraday trailing drawdown applies to both evaluation accounts and SIM-funded PAs. With this example, a $100,000 account has a max loss limit of $3,000 or intraday trailing threshold of $3,000. In this scenario, let's say you had a set take profit and you hit a take profit of $1,000, nothing above. You close the trade exactly at a $1,000 profit. It never hit a profit level higher than that. In this case, your initial breach level, or the max loss limit of 96,000, just got pushed up to 97,000. So your balance is now 101,000 because you've just made $1,000 in profit. Now you will blow your account if you hit 97,000, not 96,000. So it trails you upwards. Let's take a look at scenario number 2. Same account size, $100,000. Same max loss limit or intraday trailing threshold, 3,000. In scenario number 2, you open a trade and your profit or your equity spikes all the way to 103,000, right? Maybe it was a quick wick and you saw on your P&L 103,000. That was an unrealized. You didn't close it at that top. However, when you did close the trade, you closed it at 102,500. With intraday trailing drawdown, it includes the unrealized portion of that trade. It's going to use that 103,000 as the top to calculate your new breach level. Your highest profit, unrealized profit, was $3,000. So the initial breach level from 96,000 gets moved up to 99,000. Because you closed that trade at 102,500, you actually lost $500 worth of drawdown. You no longer have that $3,000 trailing or max loss limit. Your max loss limit is now $2,500. That means your account balance is 102,500, but your breach level or your max loss limit is now at 99,000. Let's take a look at scenario number 3. Same account size, same max loss limit of $3,000, but in this scenario, your trade spikes to 105,500. In other words, you were in the green or in profit at 5,500. You didn't close it up there. You finally closed at 103,000. So you close the trade at 103,000. Your new breach level is 101,500. You only have $1,500 in drawdown left because you did not close at 105,500. In other words, 105,500. You close at 103,000. But intraday trailing drawdown includes unrealized gains. In this case, if your equity or your balance drops below 101,500, the account is blown. Another example of this scenario with the same account size and the same $3,000 max loss limit. Let's say you're in a trade and your profit goes all the way up to, I don't know, 3,500. You don't close. And then it drops all the way down to only $500 in profit. You still blew the account because you were at 3,500. You lost 500, 1,000, 1,500, 2,000, 2,500, 3,000, 3,500. The account is blown. So even if you don't close a trade and you go all the way up to 3,000 and all the way back to zero, because it includes unrealized gains, your account is blown. So again, get very familiar with how intraday trailing drawdown works. It's probably the only or the major rule you have to worry about with an evaluation account at Apex Trader Funding. Yes, the intraday trailing drawdown applies to SIM-funded performance accounts as well, but in the eval stage, this is the major rule that you're concerned with when you're trying to pass your eval.
If you've been getting value from this content and want to support the channel, one of the best ways to do that is by using promo code JCDT when signing up with any of JC's favorite futures prop firms, like Take Profit Trader, Apex Trader Funding, and Bulenox. The code doesn't just help the channel, it also automatically updates to give you the best current discount for each firm, so you're always getting the top deal available. Again, that's JCDT. Use it at checkout, support the channel, and save while you trade. Let's get back to it.
Like I said, with Apex Trader Funding, eval accounts or evaluation accounts All you really have to worry about is your max loss limit, the intraday trailing drawdown. That's the main rule to be concerned about and not breach. Everything else, allowed. News trading, allowed with no restrictions. DCA, dollar cost averaging, allowed with no restrictions. High frequency trading or micro scalping, allowed with no restrictions. Consistency rule, there is no consistency rule in the eval phase. You can pass that account in 1 day. Consistency rule per trade, not applicable. You can pass the account with 1 trade. You want a full port, YOLO, 1 trade and pass? You can do that in the eval phase. No daily loss limits with full accounts. And as far as trading hours are concerned, you do have to close your trades before 4:59 p.m. Eastern. Congratulations, you passed your evaluation account and you made it into the SIM funded performance account phase. Now you're trading for your payout. To get your payout, these are the rules. Number 1, 8 trading days. You got to trade for a minimum of 8 trading days. Of those days, 5 of them have to have a profit of $50 or more. At least 5 of the 8 days must show a profit of $50 or more. Safety net for the first 3 payouts. Safety net or a buffer is calculated as your drawdown limit plus $100. This requirement applies to your first 3 payouts only. After your 3rd payout, you no longer have a safety net or a buffer. And again, the safety net is the sum of the drawdown amount based on your account size plus $100. It's better explained down here with the minimum required balances. For instance, a 100K account would require a profit goal of $3,000 plus the $100 for a total of $3,100. For the 150K account, which are my favorites, you have to hit $5,000 plus $100 for $5,100. That is your safety net. You can request a payout above your safety net. The balance on the account after your payout is deducted has to be above that safety net. There is a minimum and maximum payout amount that you need to meet on each payout request. The minimum amount you can request is $500. The maximum you can request depends on the account size. For instance, a 50K account, you can request up to or a maximum payout of $2,000 per payout period. Under 50K, $2,750. And if you make it to your 6th payout, there is no maximum payout amount after that 6th payout. With Apex, you do have the ability to request 100% of your profits as long as you meet these guidelines. To qualify for 100% payouts, traders must first complete 5 approved payouts. Starting with the 6th payout, you can withdraw 100% of your profits. That's huge, even if you reach this milestone earlier than 4 months. After the 6th payout, you also enter that probation phase where you may be considered for a live funded account. As mentioned earlier, Apex offers the flexibility and the leverage of having up to 20 performance accounts at a time. Each account you manage is treated as a separate standalone account, which means you get separate payouts on each one. So for instance, let's say you're copy trading 20 accounts and you qualify for a $2,000 payment per account. You can request up to $40,000. Of course, that's 20 separate payout requests for $2,000 each. Let's continue with the rules for your SIM-funded performance account, or PA. Traders must use a consistent real-world strategy or system that reflects practices suitable for live trading. No market manipulation, manipulation of the simulated trading environment, including high-frequency trading or using strategies to exploit the SIM-funded stage. Next up, dollar cost averaging. It is allowed with Apex Trader funding both in the eval phase and the SIM-funded performance account phase. Dollar cost averaging involves entering additional trades in the same direction as the original order, even if the market moves against the trader's position. You're in the red, you got negative drawdown, and you add to your position to dollar cost average yourself out of a losing trade. It's allowed. Just keep in mind that the 30% consistency rule that we're going to talk about and the 30% consistency rule per trade still apply, and we'll talk about those rules in a second. When you're trading on an Apex performance account, you do have to have a strategy and contract size consistency. Contract size should reflect a consistent trading approach allowing flexibility to adjust based on factors such as risk, market conditions, and volatility. So what does that mean? You can't trade for, let's say, 7 days with one contract or two contracts. Then all of a sudden on the 8th day, you're in the red and you YOLO yourself into the green by trading 10 contracts. You're not consistent. That's windfall trading. That's gambling. And your trade could have gone the right way. It may have gone the wrong way, but it's not true consistent use of contract size in your trading. They explain it here. However, erratic spikes or inconsistent changes like trading 10 contracts one day and then 2 contracts the next day solely to secure a payout are not permitted. Of course, this is adjustable based on strategy, but you do have to have a strategy when it comes to your contract size. With Apex, you do have a contract scaling rule when it comes to your performance account. Traders are restricted to trading half of their maximum allowed contracts until they reach the trailing threshold stop or your buffer zone. Once you do meet your threshold, once the account's end of day balance exceeds the trailing threshold, traders can then use their full contract limit starting with the next full trading session. Make sure you get familiar with the contract scaling rule with Apex on your PAs because violations can result in a denied payment, or multiple or repeated violations can result in account closure and forfeiture of all your balances. With Apex, you do have to have risk management when trading your PAs. A maximum 5-to-1 risk to reward ratio applies to all of your trades. And again, keep in mind that violations of the risk management or trades that are worse than 5-to-1 may result in probation, account removal, or a warning depending on the severity and frequency. Next up, 30% negative P&L rule. It's a 30% negative per trade rule. Open trades, this applies to trades, should not exceed a 30% negative drawdown from the account's profit balance. For instance, on a $50,000 account, if your balance is $4,000, a trader should not allow a drawdown exceeding $1,200 per trade. The 30% negative P&L rule does apply based on your balance. So if you have a new or have low profits, the 30% rule is based on the trailing threshold. If your account balance is double the safety net or the buffer, traders may use a 50% drawdown limit per trade instead of 30%. Again, it's important to understand this is a 30% negative P&L rule per trade. Next up, 30% consistency rule. When requesting a payout, no single trading day should account for more than 30% of the total profit balance. At the time of your request, your highest profit day since your last approved payout cannot be more than 30% of your total profit. You need to make sure you understand how to calculate the 30% consistency rule because it affects how much profit you need to make before being able to request a payout so your payout does not get denied. So for instance, on a 50K account, if your highest profit day since your last approved payout was $1,500, in other words, you had a profit day of $1,500, you must have a $5,000 in total profit to request a payout because 5,000 times 30% is 1,500. To clarify, you don't blow your account when you don't meet the 30% consistency rule. Let's say your profit goal is 5,000, so 5,000 times 30%, you should average around $1,500 max per day to be within the 30% consistency rule on a $5,000 profit goal. Let's say, for instance, one day you didn't make $1,500, you made $1,800. Well, you just pushed your profit goal from $5,000 to $6,000 to meet the 30% consistency rule. $6,000 times 30%, $1,800. Think about it this way. If you make more than 30% of your profit goal, you are simply pushing your profit goal higher to meet that 30% consistency rule. Just like trading an Eval account, you can trade the news with your PA. Apex permits traders to engage in news trading during significant market events, which can lead to rapid price movements. The only rule to worry about here is you can't hedge. If you're going to trade the news, you have to have one direction only on all of your accounts. All right, to sum it all up, these are the main rules with Apex PAs. Genuine trading strategy. You have to have some type of consistent, real-world trading strategy that aligns with live market conditions. Dollar cost averaging allowed. News trading allowed. Flipping is allowed as long as 5 out of the 8 trading days have a profit of $50 or more, you're good. You have the contract scaling rule, which allows you to trade half contracts until you meet the trailing stop. Maintain that 5-to-1 risk to reward ratio on all of your trades, and make sure you meet the 30% consistency rule plus the 30% drawdown limit or 30% P&L per trade rule. Make sure you stick to that 30% consistency rule that's based on your drawdown limit plus the 30% per trade rule or P&L rule that also applies to all Apex PAs. It's a lot of rules, but I've always said it. If you can request a payout with Apex Trader Funding, you can request a payout with any prop firm. Sure, Apex Trader Funding has probably the toughest rules in the futures prop firm space, but the leverage of having 20 accounts makes it totally worth it as long as you can trade within those rules. For a detailed breakdown of all of these rules, make sure you visit the Apex website and under their FAQ, look for this document, Apex 3.0 Payout and Trading Rules.
Leave it to Apex to make trading feel like you're prepping for a CPA exam. But hey, when you're offering up to 20 SIM-funded accounts and letting traders print 5-figure payouts from their couches, yeah, it kind of makes sense. At the end of the day, you've got to ask yourself, can I follow these rules long enough to actually get paid? Because as much as we'd love to YOLO and get rich quick, it's their house, their rules. The good news? They do lay everything out clearly. And if you stick to the rules, Apex really can be the payout king. Some of these traders are cashing out like they hit a mini lottery jackpot.
Thanks for watching. If this video brought you value, smash that like, subscribe, and hit the bell so you don't miss the next one. As a small channel, we need you to help beat the algorithm. Please share this with your trading crew, your Discord homies, whoever needs to see it. Looking for more? Check out these videos next. There's always something valuable to take away.